Hello, everyone. Hope you had a wonderful trading week. A lot's been happening with the news as far as the China trade deal, and most of you that are active traders already are well aware of all of the major news headlines. So, not going to waste a heck of a lot of time with that. And as most of you know that have been following this channel for some time, I am not a news trader. I just basically read into the news to try to gauge sentiment and then do my price action analytics at that time, and then just try to trade off of what I see happening with the money flow versus what the headlines are pushing. So, again, hope everybody had a great week, and happy Mother's Day to all of you mothers out there. I'm going to try to be as quick as possible with this to try to just get through it so everybody can go on with their days and evenings, celebration with family and friends, obviously. So, again, looking at dollar here, last week I was expecting to see, a couple things that I had identified. Let me just get this out of the way. I was expecting to see a little bit of a dip here into this area if we failed to get above that 97.40. We did get a dip, but we froze right at that 96.90 level roughly. I think that what's going to happen here is we're actually going to see some further push to the upside here with dollar. Now, again, it's been a little bit of a tough going for it. It's been consolidating after this nice little breakout here. We've had a very nice push into the 98s, pulled back again, and then we've been kind of just consolidating within this channel between 96.90 and I'd say around 97.33 or so. So what I expect to see this week going forward is to see a little bit more of this up and down, and I think that we're going to see here is another push up into around 97.60. Now we do have some resistance here along this level, which should give us a little bit of a pause, if you will, around that 97.50, 60 area. If we get above that level, we confirm the support, then we should be able to start swinging back into those 98s. And I think that's what we're going to actually see here. Just kind of gauging some of the price action off the dollar yen heading into the end of the week. Had a nice strong recovery. Again, dollar kind of resisted to go any further to the downside. So the main key here is that I'll be watching, as well as all of you should be watching for, is if we do see a failure up here around that 97 40 area, then we revisit that 96.90, and if we fail to hold it, then obviously we're going to be looking for a further pullback and probably going to be ending up somewhere within that 96.30 area before we get a little bit of consolidation going and trying to revisit that 96.90 support level that we broke down from. So again, I still think that we're going to see some bullish move here to the dollar. It's been holding up relatively well, and the key levels again 97.40 to around 96.90 for the direction. Again, if we fail to hold the support, then you'll be looking down around 96.30s. Conversely, if we break out, then you'll be looking for that 96.50, 97, 50 to 97.60 consolidation here, and then a move potentially back up into the 98s. So I'm just going to go ahead and save that for next week references, and we can go ahead and continue forward. So looking at gold. Now gold was looking like it was setting up a inverse head and shoulder pattern on the lower level time frame, specifically around the 4-hour time frame. Again, it looks like if the dollar can go ahead and get its feet underneath of it and start driving to the upside, it might be setting up for it. From what I'm seeing, it kind of is giving that level of higher probability. Again, gold has not been able to break out above that 1290 level specifically. It's been kind of range bound between around 1280 to around 1289-ish, again with a couple outlier prints. We've been holding up very well, and in fact, if I just go ahead and move this out of the way, you can see that, again, unable to really penetrate above those 1287s, let's say. So again, I think that what we're going to see here is what I basically put in play a while back, maybe even at least 2 weeks ago, where we do have that failure here in this 1290 zone, looking for another push back down at minimum to around the 1267s if dollar does go ahead and get underneath its feet, or if indices continue to rally, there'll be a lot of fear of missing out and a lot of dumping of safe havens and chasing this market rally higher. I know it sounds crazy, but just from what I'm seeing on my end, which obviously I don't put out all that information for all of you, but again, for my members, I am kind of giving those breakdowns to details of my thoughts, what I'm seeing price action wise across different pairs and different indicator pairs that I use to kind of forecast direction. So again, I'm thinking that we're going to go ahead and see dollar index continue to try to get some more upside going, which means probably indices rally, and we're going to have safe havens dumped, and then that's going to take us down to 1267 minimum, with a potential even take us into those 1250s. Now, if dollar does go ahead and do the opposite of what I'm anticipating here, then obviously we'll be seeing a move above 1290 that squeezes above 1296 into the 1305, 1307 level, some consolidation at this point, and then a further rip to the upside. But again, I give more credence to a move back down to at least the 1267, 1270s, if not lower. If dollar reaches those 1298s, that'll take us down into the 1253, 1250 zone. So I'm going to go ahead and just leave that as it is here, and continue on forward looking at crude oil. Now, crude, I was expecting to see some further upside near term before some downside. Now, looking at the price action this week and what we've been seeing with the headlines, I'm going to go ahead and just leave this upside potential still valid. And the reason why, I'm going to have to actually drop into the 4-hour time frame, and this is from our previous analysis. Sometimes I hide them on different time frames just so that I can see what I'm looking at without getting a lot of false readings. So I still think that we're going to hit that upside target here. Basically, what's been happening is we put in that strong low, and that low is based on a weekly trend line resistance slash support as well, but it's a longer term trend line. So every time we've managed to hold on to that trend line level, we've always seen those strong bounces, and so far we've just been consolidating, kind of gearing up, I think, for another push up into those 63s, if not even higher, up into close to 63.80 to around 64. It's definitely a possibility. So far we've been, again, putting in some series of higher lows here, drifting along the way, and again, as you can see, we're still kind of seeing some selling pressure come in here. So kind of channel bound within like a flag, if you will. And if we can get above that 62.30 level, consolidate, then we can start talking about a rip above 63 into and close to, again, if not outright, hit the 64 level. So I'm just going to go ahead and just drag this forward on this this template. I use a different one for different purposes, obviously, but here just expecting to see this nice consolidation come to a conclusion. I think that we go ahead and get that break to the upside, start seeing 63 to around $64 for oil as we head into the future here. And that's also going to be an additional assistance into indices continuing to see a squeeze to the upside based off of the Thursday, Friday price action activity that I've been seeing. So still thinking that we're going to see some pretty good movement off of the 61.50 level to the upside. Now, conversely, if 61.50 fails, then obviously you'll be looking at a 61 test followed by a potential test of that major trend line yet again. But I'd be kind of surprised by that. But again, we'll see how it plays out. I do think that oil will try to at least stay range bound for a little bit before it tries to push to the upside yet again. So let's go ahead and move forward. Lastly, with natural gas. And natural gas, again, did not break down below that 251.6 as I was anticipating, which is completely fine. Again, can't nail every single turn in the market as long as you can gauge the direction and get back in. That's why stop losses are crucial. They add that flexibility for when you are wrong, when you see the price action come back into what you're see as consolidation, and the direction still appears to be correct with your analysis, then you can go ahead and hop back in, make back what you were stopped out of, and then some to the upside. So for natural gas, what I'm thinking here is we go ahead and see a little bit of a near-term pullback to around that 2.6 level. If she can hold it, then we should be able to come back up, challenge, and break 264 and start looking at a move back up into 266, if not even higher, to around 268.5-ish, maybe 270 on the print, and then looking for another pullback. If we hold 264, then again, this move still tries to trend to the upside, probably looking at, again, another move back up in around 274, 273-ish. So again, you have a very nice and obvious trend line, which for those of you that need to see it visually, again, you can see that we are basing higher lows, higher highs, which is always obviously a good thing for a bullish trend, and obviously what's needed for a bullish trend by principle. So again, if we do end up failing to hold this 260, then we start talking about revisiting those 256s, potentially bouncing here a little bit, and if the bears come back in, trouble here back down into those 244s below that. So again, there is some things that you should be paying attention to on your weekly time frame. The importance of breaking out above that 264 is crucial, and the reason why is if you look back here in your weekly, Let me just get rid of that. If you look back here in your weekly and pull your chart forward, you'll see here that we had a few weeks ago a big red weekly candle, and over the past 3 weeks we've put in basically price action close within each one, within the main body of this big red candle. So 3 weeks of this, not a good thing. Unless we can break out to the upside, then we'll get that squeeze to the upside around 273, 274, as I just mentioned. Conversely, if we fail, okay, to break above the high or the opening of that red weekly candle around at 264, which is why it's so crucial, then we'll see a bearish continuation to the downside, and obviously we can start printing lower and lower, as I've kind of alluded to last week or the week before. The key here is holding these lows here around at 254. If that does in fact break down and this trend continues lower, then we are going to see even lower as we head out into the future, back into the low twos. Okay, but I think near term, keeping a price action above that 264 is going to be absolutely crucial, and just for those reasons I just showed. So make sure you're paying attention to that 264. Big deal here. We pull back here a little bit. Bulls have to come in and save this around the 260s. If we're going to get further upside, we need to break those 264s to squeeze into the 272, 273s or better. Okay, so that'll kind of avert that downside potential at that time of the break and hold of the 264 level. So we'll see what happens here. Big week. If anybody has any questions, comments, or concerns, feel welcome to reach out to me. The Trader's Perspective at gmail.com. Obviously, you can follow me on Instagram. I'm not as active on there as well, so just make sure you reach out to me directly, or you can check me out through the website as well. But Gmail is obviously a quick way to get a hold of me as well. So again, happy Mother's Day to all of you mothers out there. Enjoy time with family, friends outside the market, and I'll update you all next weekend.